All right, welcome back everyone to yet another video. And in today's video, we will be breaking down Robinhood earnings. And before we get into the charts and all of that, I want to start off with my earnings forecast. As you guys might have seen, I posted an Robinhood earnings preview where I showed some of my expectations. And in particular, I had a forecast of $997 million of revenue. Robinhood came in at 989, so I was a bit off by 8 million. However, look at Wall Street, 922 million. So compared to Wall Street, I was a lot closer. And, there's a good lesson here, because the way I did my forecast, even though a lot of this ended up being quite off, there was still some logic and reason to how I came to the conclusions, how I made the forecast. There was some math behind, there was some logic behind. And most people, when they find out that their own forecast differs so much from everyone else, in this case Wall Street, they start to second guess themselves. And in my opinion, that's one of the biggest mistakes that people do when it comes to forecasting. They might have a forecast, but then they find out, oh no, I'm way off from everyone else. I must be missing something. But no, first make your forecast to the best of your ability. If you're way off, analyze why you were off. Like, don't adjust just according to what the consensus is. Odds are the consensus might be wrong. And at the end of the day, you're making your own investment decisions based on your understanding. So that's the most important thing. Focus on yourself first. And with that said, we have a bunch of charts to get into. As I mentioned, first and foremost, total revenues came in at 989 million, which is up 45% year over year. As I mentioned, it beat analyst forecast by 8%. It is up quarter over quarter. And if we break that out, you can see that the black bar here is transaction-based revenues. The golden bar is net interest revenues. And then we have subscription revenues in blue. And if you see here, actually, transaction-based revenues were down quite a bit. And we will get into why that is in just a moment. But there's one column here that I've been preaching ever since I started covering Robinhood that I'm very, very bullish on. And that is interest revenues. That is going to be a very, very important segment for Robinhood moving into the future, and also a big increase in subscription revenues. Now, this subscription revenue is mainly increased by this amount due to it being the proxy season. As you can see, like Q2s in general will have a lot more subscription revenue. That's because that's proxy season. So proxy revenues are up quite a bit during Q2. But also, Robinhood Gold is growing pretty well. So naturally that will be up. So first of all, let's have a look at transaction revenues, which typically makes up the majority of Robinhood's revenues. Down to 539 million compared to the previous quarter of 583, which is also down from the all-time high Q4 2024, where they recorded $672 million in total transaction-based revenues. And if we break that out into the different segments, so transaction-based revenues are made up by cryptocurrency trading, options trading, and equities mainly. There's another category too, but mainly these three that we track. And you can see that options really carried this quarter up to 265 million this quarter. Crypto is actually down quite a bit, down to 160 million. And equities actually increased as well to 66 million. But you can see, even though the volumes for equities is a lot higher on a dollar-based amount, it really doesn't translate to much revenue at all. Options and crypto are the main segments here that are carrying transaction-based revenue. So that's always important to keep in mind. You want crypto adoption to increase among, the general population, the average investor. And you also want them to be knowledgeable about options and start to trade options if you are a Robinhood investor. That's where Robinhood makes a bulk of their transaction-based revenues. However, as I discussed in a complete equity research report on Robinhood, which is now up on research.typeofcapital.com, which is my Substack that has a lot of stuff for you to check out. But I posted a Robinhood equity research report. It's really in depth, but what I covered there actually is that Robinhood is actively finding ways to increase their equity yield. If we go to the equities yield here, where we look at, okay, how much revenue, equity trading revenue do they make based on the volume? And it is spiraling down. And that is because the equities market are quite mature. So how does Robinhood, salvage this category? And you might know that Robinhood recently held an event. I can't quite remember the name. It had a catchy name, but basically they are launching trading through tokenization, like stock tokens in Europe. Allowing European users to trade, for now, a limited set amount of equities and ETFs using stock tokens. And the beautiful part about that is that there is no commissions. Or payment for order flow is banned in Europe. So they need to find a way to keep, Robinhood being commission free, but also still, make some yield, because they can't get it from market makers because it's illegal in Europe to actually sell order flow. So what they did is they take a 0.1% Forex fee, which means that the yield on equities in Europe is 0.1, so up 10x just by tokenization in Europe. That is for now not playing a big role, but it really shows like that Robinhood is thinking of ways to stay ahead. Like they are setting up themselves for the future of finance while also dominating the present. So it's going to be interesting to follow along how stock tokens, perhaps start trading more than equities. They've announced that they want to trade art pieces and a bunch of stuff. So that is coming. But for now, in Europe, 0.1, which is a 10x increase compared to the equities yield, from order flow in the US. So that's going to be interesting to follow. However, one disappointing part here, which I was quite bullish on, I actually had this increasing, is the cryptocurrency yield, which is now down to 0.46% after, having this positive trend for several quarters in a row, or even years. If you backtrack to it used to be 0.1% in 2021, then it started to gradually increase, reaching an all-time high of 0.55 take rate in Q1 of 2025. However, it then decreased. And the reason for that is probably the 10Q is not out. Like we don't have all the details yet, but my understanding here is that due to their acquisition of Bitstamp Exchange, and they are offering crypto trading for institutionals, they take a much lower yield through Bitstamp. So probably the retail side is still pretty high in terms of yield, but due to the Bitstamp acquisition and actually beginning to trade under Robinhood, that's likely the reason why the yield is down. So we're going to have to track that the coming quarters. But yeah, that is probably the reason why it decreased, because in general, the crypto markets are very young. They are nowhere near being as efficient as equities. We're not going to see this downward spiral for a long time in crypto. I mean, the adoption rate of crypto is just so low still. Next, let's have a look at interest revenues, which is, as I mentioned, one of the segments that I'm very, very bullish on. And it grew 25% year over year, up to 357 million. And the overall interest yield, we can see here the distribution. Credit card, of course, has the highest annual yield as of right now. However, the volumes are very low, so the impact isn't big. 10.14% yield on credit cards, which is, amazingly high yield. Next up, we have the margin book, decreased slightly, 5.12%. The cash and deposits annual yield, still high. Rates are still high, 4.16%. That is going to drop off into the future. as interest rates decrease. But yeah, for now, still pretty attractive at 4.16%. But then we have the biggest segment, which is the cash sweep, 0.8%. So that is what's bringing the overall yield down. I believe it's 2.7. I don't have a chart, but we can check quickly here. Let me see. Interest earning assets here. The annual yield 2.78, which is up from the prior quarter, which was 2.54. Matches, Q4 of 2024 at 2.78. So that is the annualized yield total. Another thing, for the people that have bought the spreadsheet, I am updating it. I'm just waiting for the 10Q to do the final updates before sending out, a new version to everyone that has purchased it. So if you're interested in, supporting me and also getting Excel sheet, with the charting tool and everything and all the data you could possibly imagine for Robinhood, dating back as far back as the filings goes, including the S1, you can go to typeofcapital.com. There is a Robinhood financial model here, so that's a good way to support me, but also get a lot of value, because it takes hundreds and hundreds of hours to do these Excel sheets. I also have one for Palantir, so you can get the both in a bundle, with 50% off on one. So please consider that if you're interested in analyzing Robinhood or Palantir, or you just want to support me and get a lot of value out of it as well. So with that said, let's check the subscription revenue next, which is here. And as you can see, Q2s will always be a lot higher. 93 million for the quarter, which is an all-time high, primarily driven, by Robinhood Gold, but we have that seasonal proxy revenue hit during Q2. Let's see, anything else? Options volume yield, I believe, was up. I had forecasted it to be down slightly, so up above 50%, in yield. Very, very good for options. It just proves that options, similarly to crypto, is very, very new and very far from being mature and efficient. So there's a lot of spreads here for market makers, primarily Citadel Securities, paying Robinhood a lot of money for that options flow. That's good to keep in mind. Of course, ARPU, or average revenue per user, another important metric to track, which is up to 151. We had this slight decrease in Q1 to $145 average revenue per user. It is now up to 151, or 33% year over year. Let's see. Interest earning assets, did we have a look? Yeah, so as you can see, it probably doesn't even show up on the video because it is so tiny, but there are 4 categories here. I'm actually gonna zoom in on Q2 in just a moment, but you can see that the interest earning assets, the portion of the assets under custody that actually can earn interest, are increasing and increasing rapidly, which is very, very bullish. Because that will farm yield and make the whole segment be much more meaningful into the future. And the reason why that is important is that trading revenue is very cyclical. Markets will be hot, markets will be cold. When markets are cold and there's not a lot of volume, not a lot of volatility, Robinhood doesn't make a lot of revenue from the segment, which might impact financials drastically when it is, by far the majority of the revenue. So scaling subscription-based revenues and scaling interest revenues is very, very important for Robinhood. If you guys caught the earnings call, Amit was actually there in person, and he asked that very question, like, okay, what are you doing to reduce cyclicality in the stock? And that's something that I've been talking about for a long time. So I'm very happy that Amit asked that question. Let me zoom in here on this specifically. You can see that This green little bar here, it might not show up very well. I'm going to zoom in even more. This green little bar is growing, which is the credit cards. We know that they are, scaling out credit cards over time, doing it in a very responsible way. And we know that credit card yield is amazingly high. So this little tiny portion growing is very, very bullish. It's going to take some time before it becomes meaningful. But yeah, the primary increase, of course, is in cash sweep. Let's see, what was it like this before? Yeah. So margin book, of course, up slightly, the black bar at the bottom. Then we have cash and deposits, primarily driven by interest rates. We have the cash sweep, that's the biggest and fastest growing segment. And then we have the credit cards being tiny portion at the top. So I think that covers most of the revenue. We can also look at revenue per employee. So I have two metrics here. I have revenue per employee on a trailing 12-month basis, which is typically how most analysts and people measure employee efficiency. They annualize revenue, and not annualize. They look at the trailing 12 months against the current employee force, and then they get a number. So in this case, Robinhood is making, over a million per employee per quarter, which is of course great. It is down slightly. They had a pretty big increase in employee count this quarter. I think about 400-ish, which is one of the bigger increases in recent times, which is why this is down slightly. And Robinhood just reports, average revenue per employee, not on a trailing 12-month basis, which is why these two are slightly different, but I put them together on the same chart because I think both are interesting to track. Some KPIs, assets under custody in total, grew massively. I mean, from 221 billion to 279 billion. A lot of that came with, Bitstamp acquisitions, but still a lot of growth. Markets had some pretty big increases during the quarter. It was down in the beginning, but then markets have surged. So a lot is, of course, due to, market profits increasing, the value of the assets under custody. And if we look at the breakdown here, we can see that equities here is actually slightly down, and cash about the same. Actually, never mind. We didn't get these numbers yet, so I'm waiting for thank you. I'm like, wait, this doesn't make sense. Actually, we don't have Q2 yet, as the thank you is not out, so never mind that. I think we can check. No, we can't check average assets per users yet either. However, we can check customers. A professional YouTuber would edit that part out and be like, no, I didn't say anything stupid. But, it is about to be, midnight doing this for you guys. So it's going to be mistakes. Let's just look past that. Anyway, total funded customers up to 26.5 million. I only forecasted 26 million flat. So this is quite a big increase, 10% year over year. Very bullish. And also what is very bullish is the gold subscribers up to 3.5 million and up to 13% adoption rate. With all the new services and features and value that gold provides, this is probably going to increase quite rapidly the coming quarters. I mean, we have the banking, we have they have a whole slide with like 10 line items why gold is good value for the money. I believe it's only $5 per month to be a gold subscriber. Then there are some services within gold that can increase the revenue per gold subscriber. But in general, for $5 per user, I believe the adoption rate over time will grow quite significantly. And as the customer base scales, the subscription revenue will also scale quite drastically over time. Monthly active users is actually down to 12.8, and it has been down for 2 quarters in a row now, although just slightly from Q4 to Q1. But yeah, we had a dip to 12.8. Typically, Q2s have a seasonal decline. We can see that the year prior, big decline here in monthly active users, similar here in 2023, decline. So on a percentage basis, it is pretty much what the numbers have been for the past 3 years. So nothing alarming in and of itself. We had the same happen in 2022. So seasonal monthly active user adjustment, and typically Q3 should be up. We'll see. Typically the end of the year and the beginning of the year are the strongest, with the Q2 and Q3 being the weakest historically. So not yet alarming. However, one of the worst metrics is the retention rate. Now, I calculate this because Robinhood, they provide a customer retention rate in one of their slides, but there's no way for, regular people to calculate it. They use data that is not available to us. So we have to calculate it ourselves using some of our own assumptions. So I average it out based on, the period prior. I'm probably going to make an equity research article about this with the exact formula. But anyway, it has been pretty stable, in the 95 range for, quite some time, but now down to 91%. So I'm interested to see in the coming quarters if this will increase. Above 90% customer retention rate is, of course, strong. But I'm still curious why it might be down. I will have to dig in a bit deeper when the 10Q comes out. All of that stuff takes some time to digest and actually analyze this before I post an article on it on the Substack. But yeah, that is a peculiar stat that is worth keeping track of. Net deposits also down $4 billion compared to Q1. A lot of that can probably be explained by macro. So typically when it comes to net deposits, it is not that much, seasonally driven. Typically markets, they are hot and cold depending on what the investor sentiment is, and that is quite unpredictable. People say you can never predict the markets, and similarly here, you can probably never be quite accurate when it comes to predicting or forecasting net deposits. But a bit down in Q2, we had the April dip. I would have thought that would lead to a big surge in net deposits overall on the retail side. We heard that, while during the quarter, while institutions were sitting on the sidelines, that retail was actually loading up and being big benefactors of that April dip, because most companies are up quite a bit since then, including Robinhood, about a 3x since then, almost from the lows in April. So yeah, quite a peculiar statistic there as well. Going into some trading metrics, market share of equities is actually back up to over 1%. So you can see that, in Q1, a lot of action in the markets happened on Robinhood. We had the stimulus checks. We had a lot of trading activity going on, most of it on Robinhood. That's when Robinhood had its all-time high in market share against, the US equities notional volume. Since then, people started, leaving Robinhood. Markets turned cold. Not a lot of activity here. Very low market share. However, it has been surging as of late. Reached this new high in 4 years. In Q4 of 2024, 1.06. Now we're back to 1.04. So the overall trend, very positive there. Options volume up. This is very, very bullish. As people learn about options, the amount of options contracts traded keeps increasing, and we all know how much revenue potential there is in the options trading overall. So this is very bullish that this keeps going up and up and up. However, crypto market share down a bit. So this is approximated. I made a video on how I calculate this. I think I labeled the video like you've never seen this Robinhood metric, because I don't think anyone took the time to calculate this on their own. But here you go. If you're watching this video, you're probably one of the few that has seen an approximated market share of relevant cryptocurrencies that trade on Robinhood, down slightly from 0.66% market share to 0.59. Hopefully that will also re-accelerate, because as we talked about, crypto is a very, very big revenue segment for Robinhood overall. Some trade sizes. The equity average trade size jumped massively. The crypto average trade size also increased slightly, but nothing too crazy. But the average equity trade size is just increasing in the past few quarters quite dramatically. And keep in mind that this is, the average trade size on Robinhood in equities is now 3.5K basically. Is your own personal average trade 3.5K? I don't think so. at least mine aren't. I'm not that rich, but this means that a lot of new whales are entering into Robinhood, probably leaving some traditional brokerages behind, and driving the average up by quite a lot. So this is very bullish to know that a lot of bigger players are entering Robinhood, and this is one of the ways that we can track it. Daily equity, daily average, what is DARTs again? My mind is daily average revenue trades, So how many daily average trades in millions? You can see that it's pretty stable for equities here in black, 2.4 daily average revenue trades from Q4, Q1, and Q2. And then we have, as we observed in the options trading, overall increasing for 4 quarters in a row here, and crypto actually down for 2 quarters in a row. Did we have a look? Yeah, we had a look at that one, and also options volume. Okay, everything in trading metrics covered. Let's go to profitability metrics. We have adjusted free cash flow to the firm. So this is looking at operating income and then removing reinvestment needs and tax. However, typically the free cash flow to the firm metric also includes the net change in working capital. However, for banks or companies with a lot of assets under custody, there is a lot of movement in the working capital, which means that either the free cash flow is going to be like negative 500% or up 500%. Like that's why you kind of need to adjust it to get a better understanding of the cash generation of the company. So that's why it says adjusted here. It is adjusted for working capital only in the free cash flow to the firm metric. And reach a new all-time high at 51% free cash flow to the firm margin, which is of course very, very strong cash generation, and the reinvestment needs for Robinhood are extremely low, like not a lot of capex at all. This, if they can keep 50% free cash flow to the firm margins, that is quite impressive. Already like 45% last quarter, I was like, oh my god, this is insane. Typically in terms of free cash flow to the firm margins, a SaaS business, a very, very good one, will have something like 30 to 40%. Even like above 20% is considered good for a SaaS business. But I mean, Robinhood is up to 50% in this quarter. Very, very strong. Customer acquisition cost and average revenue per customer is a good way to see, okay, how much revenue is each customer bringing in per quarter, and how much does it cost to acquire a customer per quarter. So as long as this blue dashed line is below the average revenue per customer, it is very, very bullish. That means that the amount they spend on acquiring a customer, looking at marketing expenses and stuff like that, means that they, within the quarter make that back on average on just having the customer. So as long as this is lower than the average revenue per customer, that is very bullish. So for example, in Q4 here, it was a very, very large difference where it cost on average $51 to acquire a customer. And on average, a customer made $164. So basically within 1 month, users paid themselves off, a third of the revenue per customer was in an acquisition cost. So basically only 1 month of the quarter was, at a loss, and then the rest is, pure benefit. So key here for Robinhood is to keep the blue line below, the average revenue per customer. So I like to track that. It shows that they are growing responsibly. They're not just throwing a lot of expenses at acquiring customers at any cost necessary. There's a lot of criticism. Robinhood does a lot of matches. Transfer over your whole brokerage to Robinhood, and we will give you a percentage match on your assets and stuff like that. So people were kind of worried, like, is this really responsible by Robinhood? Well, yes, they are quite responsible. There are only 2 quarters where the customer acquisition cost was higher than the average revenue per customer. Sorry, that's a lie. There are 4 or 5. Let's see. Q3, Q1, Q2, Q3. Okay, there's like 5, but still, overall, they make a lot more revenue per customer than they spend to acquire a customer, and that's the important part to see here. EPS, I don't really care about. Some of you might. Up to $0.42 of EPS, up slightly compared to the prior quarter on a diluted basis. But what I do care about is some GAAP margins, namely, the operating margins and the net income margins here. And we can see very, very strong operating margins, which of course serves as a base for the adjusted free cash flow to the firm here. 44% operating margins, 39% net income margins. That is very, very high profitability and very, very attractive for shareholders, which of course translates to, in this quarter, $386 million in net income, which is a 39% margin, as we just mentioned, up from the prior quarter of 36%, which was $336 million. Rule of 40. Kind of interesting to track for SaaS businesses. I don't know if Robinhood really, I guess it kind of does count as a SaaS business, but typically what the rule of 40 is you combine the growth rate with the profitability rate, and combined they should equal 40% or more to show that you are growing, in a quality way. If it is below 40%, it means that it is very, very low quality growth. So sometimes, some companies might completely disregard profits and just try to grow as much as possible. But if they can't offset that, meaningfully, then it's considered very, low quality in terms of growth. So for Robinhood, they are at 101 score. We can check exactly how they calculate it. It is not a GAAP metric, so it's up to each company or analyst to define it however they want. So the way that Robinhood defines it is change in total net revenues and then the adjusted EBITDA margin. So that's the way that Robinhood calculates it. So in this case, the change in total net revenues is 45%. And the adjusted EBITDA margin is 55%, which gives you a score of 101. And that's what it's been at for 2 quarters in a row here. 101, 101. For Robinhood, it is not as important as it is for a company like Palantir. where it is a lot more important to track, okay, the company is growing, but how is it growing? Is it completely disregarding profits, or is it actually, keeping up, being above the rule of 40? So for SaaS businesses, it is more common, but Robinhood reports it, so I made a chart out of it. Let's look at some stock-based compensation. Now, of course, this charted period will look very strange, but I can hide those. Let's see, up to Q2 of 2023. Let's do that and just hide all of these historical periods to get a bit of a nicer chart here. There we go. Sorry, let me delete this. There we go. Let's see, charts. Now, so we can see that overall, let me fix this. Overall, Robinhood is decreasing the dilution rate, and it's kept it at 8% for 3 quarters in a row. Most investors would not consider 8% SBC as a percentage of total revenues as a lot of dilution. When we're talking SaaS companies, the average is somewhere around 22%. So 8% is relatively low. It is still quite high compared to a mature company. A mature company like, Salesforce, I believe, is somewhere around 3%. So compared to a mature SaaS business, it is quite high. But compared to the SaaS average, it is very, very low. So in my opinion, dilution is not a big deal for Robinhood. If we look at the outstanding shares, it increased 1% year over year. So not meaningful at all. Of course, they offset a lot of the SBC with share buybacks. Some of you might know that. And we can't really track institutional ownership yet, as the the 13F filings are not out. But yeah, I think we covered pretty much everything you need to know. It only took 36 minutes. So for me, the 4 most important charts to keep track of, I think interest earning assets, this growing, along with interest yield. You can put these two together. These two are very important to me because it will reduce cyclicality meaningfully. Another one is the crypto yield, and of course the crypto volumes. They also go hand in hand. If this can keep increasing, that will start to carry transaction-based revenues into the future, along with options volume yield. Of course, another important metric, if we go into our third, is gold subscribers and the adoption rate. Very, very important. Similarly to interest earning assets, that will remove cyclicality meaningfully. And then the final most important chart is that Robinhood continues to grow their market share of the US equities notional volume. Over time, we hopefully can start to track this, in internationally as well. For now, it is only the US, but Robinhood is only at 1% market share. The addressable market is still so huge, and this is only equities. I mean, Robinhood also has a lot of market share to start to take in. Let me fix the chart here. It is still very, very tiny compared to the overall crypto market. The crypto market is growing at a fast pace, so Robinhood will be a key player there, I believe, for retail investors to get crypto exposure. Of course, that is a big revenue source, but yeah, market share shows that we are incredibly early in Robinhood's story. So over time, tracking this is very important, I believe. I try to speed run, when I make this an hour long, people get upset. So we're at 40 minutes now, about to close it out. But just a reminder, if you are interested in the models that we looked at here, we have a dashboard, the valuation model, a lot of stuff in this Excel sheet. It basically has everything you need to analyze Robinhood. Currently at 26 price to sales, 52 price to earnings, a lot of, data, close to 1,000 rows of everything you can imagine, annually, quarterly, however you want. That is available on typeofcapital.com along with the Palantir one. And if you are interested in my equity research, very, very in-depth and teaches you everything you need to know about companies, it is available on research.typeofcapital.com. You can also get all my valuation models. You can have a look at my personal portfolio, thematic portfolios, equity research, articles, and a lot more into the future. So research.typeofcapital.com and typeofcapital.com if you're interested in supporting me and getting a lot of value as well. So with that said, thank you guys. I've been doing one video per day throughout the whole of July. It's been exhausting, some days I really had no idea what to make a video on. If you've been following the channel, I maybe posted once every other week, once a month sometimes, if there's nothing to make a video of. So it's been quite a challenge for me, but you guys have been showing up to live streams, you've been watching the videos, you've been liking, subscribing. So I really appreciate all of the support. I hope to stay quite active on YouTube moving forwards, but also on the Substack, which I just recently launched, has surprised me by how many subscribers there are. So yeah, just a huge thank you for everyone that's been here throughout July, and I hope you will continue to stay with me as I hopefully will provide some meaningful equity research for you guys in coming videos and articles. So thank you so much, everyone. Catch you in the next one. Bye bye.